Hello guys, welcome back to the channel. So today I use the easiest SMC strategy available on this Forex markets, and I know most of you guys already know this strategy, right? I just want to make this video just to remind you guys that this strategy still works and it's extremely good right now. What is the strategy? You already know the models. It's very simple. A lot of people use this strategy. Now, I don't usually use these strategies because I think it doesn't have a specific time frame, right? It doesn't have a specific time frame. That's why I don't really like using these strategies. If it had a specific time frame that it works, I'll actually do it. But these strategies, they don't have a specific time frame. You can find it on every single time frame as far as it shows up. So definitely you trading it on a 1 minute time frame, someone else will be trading it on a 15-minute time frame. And I don't like that type of fluctuations, right? Now, this is the first model. So first things first, you have to do is identify the movement of the trend. You have to identify, you can use a daily time frame or just a normal um 4 hour or 2 hour time frame to identify the movement of the trend. After that, you can now use this strategy or this models right here, the first model and the second model. So in my case, I use it today on two different pairs. We'll get to that later, right? So in my case, this is what we had since last week. Now obviously I made this cleaner so that I can actually explain what was happening. You already know since last 2 weeks we were in this consolidation. Now price did come down but failed to reach the high, so ended up breaking that consolidation, came back for a retest within this fair value gap, and we are shooting all the way up to take out this highs right here. So indirectly I already know we were in an uptrend. So what do I do? All I need to do is just look for these models or wait until I see that, okay, this model is actually trying to happen, right? Because you can't go ahead looking for this every single day. You can mark it down, but you have to see it before you trade it. So what you need to do is go to a 15-minute time frame. I use 15-minute and 30-minute time frame for these models, right? Go to a 15-minute time frame or a 30-minute time frame, and what you need to search for is the last BOS. Now after a last BOS, you want to identify the order block right there. Note, this is very important. That order block must bring out an imbalance immediately. So that order block has to have a fair value gap just above it. So you mark the order block and at the same time mark the fair value gap. So what price is going to do is, if the order block is here and the fair value gap, let's say, is just above it like this, so what you want price to do is, because price was pushing all the way up and we had this push back down, and this right here is our order block that actually created an imbalance. You want price to take out this high, come back and retest the fair value gap without entering into that order block. That's right. And after that, you want price to create a high, ended up coming back down to use this as liquidity, sweeping the liquidities below this zone right here and coming back into the order block right there. That is when you do what? You buy all the way up. Now, most people actually use two, they wait for two actual what? Trends, right? Or they wait for two touches like this right here. You can see that after the BOS. So let me just use this. So you can see that after the BOS, just above this zone right here, price came back, had the first low, pushed all the way up, second low, went up again, came back down and broke through that low. So a lot of people use double touches, but it doesn't really matter. What matters is what price actually gives you, right? So price can give you a double touch or a single touch, but just note that there has to be a fair value gap here that needs to be tested, and price should push all the way up, creating a normal trend before coming back down and getting rid of it. And because you know that overall trend, which is the daily or the 2 hour or the 4 hour time frame, is in an uptrend, you are just going to tag along and follow the trend all the way up. So let's go ahead. Let me show you how I actually used it right now. On gold, I used it today, but on the 15-minute time frame, and I also used it on Euro USD, but on a 30 minutes time frame, right? Now let's get back to analyzing gold. So this right here is the 15-minute time frame. This right here is the 15-minute time frame. You can see that my entry is quite high, right? Don't worry, it will make sense a lot. So this is the model right here. So what we were looking at, I think I just have to remove this, but that's just by the way, right? So what we are looking at is this high right here getting taken, you can see we had our BOS just around the zone. Price is in an uptrend, so we had our BOS just around this zone right here. You can obviously see it. Yesterday was nice. So after that BOS, price shot all the way up, came back down to retest this fair value gap. Now, this right here is the last candle that actually brought that fair value gap. You can see that fair value gap right there, right? So what you need to do is mark that fair value gap. And when you look closely, you realize that price never actually got into the other block. It retested the fair value gap and created a high. So the next thing you need to do is wait for price to actually sweep the liquidities or the lows below this fair value gap, coming all the way back down into this other block, and that is when you actually execute your trade. It's a very simple strategy. You understand that? Now, in this case, this is why I said mostly I don't really use these strategies, because it has a lot of reasons behind it. Everybody has to wait for some couple of confluences before they execute. Because when you look at this, after this BOS, price shot all the way up, came back and retested that fair value gap right there. That was very nice, right? Went up again, you can see creating a low and pushing all the way back down. So you could have just bought here with your stop loss below the other block. Easy as that. But you can see the price went ahead and hit it a couple of times. So you see what I was saying. Now, on different time frame, like a 30 minutes time frame or a 1 hour time frame, this is just going to be a double touch right there, just within this fair value gap. It's just going to be a double touch. But you can see that on the 15-minute time frame is quite huge. So that's why I said that these strategies, they have a lot of reasons behind it, and you have to be careful if you are using it. That's why normally I don't really use it every single time, but if I see it happening, I just go ahead and use right. Now you can see that I actually waited for a couple of times, right? I waited for a very long time before I executed. Price went way ahead before I actually executed my trade. Now let me tell you the reason why I did that. So we are back down to a 5-minute time frame, and this is what we are having. You can see that it's still that same setup, right? Now after price pulled liquidity from the other block and it started shooting all the way up, there shouldn't be a reason why I should execute a trade around this zone. Yes, price change character right here, gave a BOS right here, but what was stopping me was this highs right here. I've told you guys about zonal what consolidations. I don't like it. I don't like zonal consolidations. And when you look closely, critically, what price was doing was a consolidation. Absolutely nothing. This was just a consolidation, just within this range right here. Price was consolidating, right? So to me, I have to wait for price to get out of that zone. You can see highs right here, double top, double top. So I have to wait for price to get out of it, come back for a retest, and I'll execute my trade. It's that simple. There's no way price is going to go and leave you if you are calm and you are just waiting for price to do what it does and you execute your trade. So that is the same model, but I just waited for a very long time before I executed my trade. And as you can see, immediately after executing that trade, price went straight up. There's no retracement, nothing, right? Nothing that actually bothers me. Price went straight up. And that is a marvelous trade. Now, I've already taken first and second TP, but that is not the case. Now, let's look at Euro USD. So on Euro USD, I don't actually use it on this first trade, but I actually use it to add on to this trade right here. And I think I can just explain it a little bit fast if I do not really do anything serious right now. Obviously you can see that we had our BOS just around this zone right here. Just right here was our BOS. So if that place is our BOS, what do you think happened? You can see the price shot all the way up, came back down, another up, came back down, push all the way up, created another BOS right here. But you can see that this other block was the strongest other block that actually took out this high and also took out this level right here. So it's a very strong order block. So I think price coming back into this zone will be nice. But to me, most of the times I don't really use the order block that did not create an imbalance, right? So despite this being the last low, it's not the last low that actually created an imbalance. This right here is the last low, this candle right here. So let me just go ahead and remove this. This candle right here is the one that actually created that imbalance. So to me, I don't really look forward for price coming all the way back down to this zone anymore. No, I rather look forward for price coming back into which zone, which is just this level. So let me point to it, which is this zone right here, because to me this is the candle that actually created that imbalance. So when price comes back, I'm using this as the order block, not this right here. So that is why I'm saying that this type of strategies, it has a lot of reasons behind it. My reason might be different from your reason of executing, right? But when you understand it, you can actually use it on any time frame. Just have a couple of reasons, and when they are met, you execute. So to me, this right here now became that order block I was looking forward for, not this right here, but this, because after it there is a fair value gap. So I want price to touch that fair value gap, push all the way up. You can see that here we had double touch, right? I told you most of the times you have double touch, sometimes you have only one. So you realize that here we had double touch, making that place as inducement. So price swept it with this trend, came and swept that double low right there, came back to my order block, which is this low right here. And I waited for a what? A confirmation. Always wait for a confirmation. I waited for a confirmation. I executed my trade. Simple as that. Moreover, price was just coming back to retest a high again or a resistance zone again, turning this into a support level. So that was also very, very cool for me to execute a trade, right? So when you look at it, it's a very simple strategy and it's a very good strategy as well. So these are the models. You see this online, is extremely cheap to understand, right? It's not a big deal. Just try your best, take your time, understand it and execute. And remember, it has to go according to the trend. If you are doing it and you are reversing back down and the trend is going up, you are going to get wrecked, which is very, very bad. I'll see you guys in the next video. Thank you guys for watching. This week has been completely good, right? It has been extremely good. No stress. We are just pushing all the way up. So we just add in more trades. Now, I'm not doing swing trades this week. If I was, you would have seen me still having trades that I executed around this zone right here. But I'm not doing swing trades this week, right? I'll see you guys in the next video. Thank you guys for watching.